Hey, it's Sophia Ferrara with Coldwell Banker. I'm here with the wonderful and lovely Flo from New American Funding. And last week I had you submit your questions that we would ask Flo today. So we're gonna go through and get your questions answered. First question, do you guys have any first-time home buyer program?
We do. Basically what we like to do is talk to the first-time home buyer and kind of get a feel of what direction they're going in. Sometimes they might need down payment assistance. So if that's the case, then we're going to, put them in DPA program, down payment assistance, depending on where they're located in the city, the state, being Florida, of course, but we do other states too. If they have the funds and they don't need down payment assistance, then we look at maybe Home Ready or Home Possible, which are Fannie Mae and Freddie Mac products that only need 3% down, which is really great. And they have the mortgage insurance is discounted on those programs. Cool. They're great for first-time home buyers.
Okay, cool. And then kind of segueing off of that, but what are the benefits and drawbacks of an FHA loan?
Okay, well, FHA loans are great. I mean, I actually, when I first bought my house, I got an FHA loan. And specifically at that time, I got the loan because I only had 3.5% to put down, or, I had plus closing costs, so it was a limited amount. FHAs are great as far as credit score wise, because if you have an issue that way, then you don't have to, you can be a little less in the credit score department, a little lower credit score, and they will still, give you the loan. The mortgage insurance on FHA, if you have a lower credit score, is cheaper than the conventional.
Oh wow, okay.
Now the only real drawback I see on an FHA loan is the mortgage insurance is on there for life. So once you get 20% or more of equity and you don't want the mortgage insurance, then you would have to refinance into a conventional to get rid of the mortgage insurance, because it does stay on for the life of the loan.
Okay. And with that, how much money do you need to save in order to be able to buy a home?
Well, the way they look at what they prefer, depending on which program. So if you're going to do conventional and you have a higher credit score, like 680 or higher, 3% down is the minimum. And then the closing costs, which depending upon where you buy in taxes, because taxes are higher, homeowners insurance is becoming much higher. So you're going to need to have, maybe 6,000, 7,000, 8,000 closing costs. And it strictly depends upon the taxes on the property collecting for the escrows.
Okay.
And if they have a larger amount to put down, they won't have mortgage insurance. Sometimes the underwriters do want a client to have like 1 or 2 months of reserves. So when you close, you still have a little money in the bank, but they'll let you use a 401k for that as well. But general. Mm-hmm.
Okay. And student loan rules, I know they've changed a little bit.
Thank God. Okay. So recently, Fannie Mae changed their guideline, and they will allow for income-based, you to qualify using your income-based payment. Prior to a few weeks ago, they didn't allow that. It was really difficult. They wanted 1%. Now they're going to allow you to either, we can use 0.5%, or if you're on income-based, you can use that. FHA follows the same. They changed theirs a little earlier, which we're thankful for. Freddie Mac, they do not do the income-based, but they do the 0.5%. So it's wonderful if you have someone who does have a lot of student debt and they have an income base and it's very low. It's a game changer.
Okay, awesome. And then a couple other questions.
Oh, sure.
So when it comes to condos, what should you look out for?
Condos. Okay, well, condos are like their own, separate entity in the fact that they're going to look at the HOA. They want to know if they're, solvent. Investors to buyer ratio, are there any lawsuits? So it's really difficult to say, can you do this condo? You just can't, like, right off the top of your head, unless you just did one the week before, because, they don't want condo tels You can do those type of loans, but they're going to require 30% down. They're called non-warrantable. We do them, and we do them well, but that's a whole nother ball game. A condo, your basic 5% Fannie Mae, they're going to have to be approved through a condo department, and it's extensive. They don't always get approved, so.
And that process usually takes a little longer.
It takes a little longer, and what we generally ask the realtors to do is to look in the MLS over the last 6 months to a year and see what has sold in there. And just because it says it was an FHA 3 months ago, doesn't mean that lender didn't make a mistake and lend on it and then find out after the fact that it was non-warrantable. So you just have to really do your upfront due diligence and, make sure it can go, FHA or Fannie Mae, unless, then otherwise non-warrantable.
Okay. And when getting a pre-approval, can you shop lenders? How does it affect your credit score? Do you have a time limit that you can shop lenders?
Well, no matter what you do, no matter, how you can shop, that's fine. But you don't want your credit pulled. Twice is more than enough. I mean, what you might want to do before you actually have them pull your credit is talk to multiple lenders and then pick 2 of those that you like, and then, talk to them. You have to remember it's not always about rate. Can they perform? They might have a great low rate, but if they can't close the loan in time, or do they service the loan, or are they selling the loan? There's more questions than just rate. And generally, your realtor, whoever your realtor that you work with, preferably you, they will direct you to a lender that they have a relationship with, and that's really what you look for. But they can shop, and you definitely want to shop. But remember, when you're shopping, you're talking to salesmen, and they're going to tell you what you want to hear. You want to get something more concrete. Generally, if you within 60 days have your credit pulled a couple times, it's not really going to ding your score. After that, or if you have it pulled 10 times, then you're really going to impact your score.
Okay. And final question for you. What do bridge loans do? How do those work?
So a bridge loan is if you own a house and, right now, so much equity in the home, so you want to buy a new home, okay? So you're like, I'll get a bridge loan. I'll take out $100,000 out of this house and I'll put it down on that one. Contingent, so you don't have to sell that house. Well, that's great. Generally, bridge loans are about 6 months long, and it depends upon the actual lender, that the bank that they're going to. They kind of have their own guidelines, interest only, or generally interest only, but they can be interest in principal. And, it just depends on what guidelines the bank, They are difficult sometimes to get. Another issue is they have to qualify with both. The current home, because it's,
you're still owning it.
You still own it, you still have the payment. So it's funny that you said you talk about bridge loans, because one thing that we have, which is kind of neat, we just started a new program a week or so ago, a cash buyer program. It's actually amazing. If, let's say you have a conventional buyer that has, 687 credit score, they own a home, and they want to sell their house and take some of the cash and buy a new house. Well, contingency is not impossible, Yeah, we know. But and even if they didn't have a contingency and they have a conventional, they're still getting beat out by cash offers. So what we can do is, it's really kind of neat. It's we take the information, get the buyer approved. Basically, we know they're going to sell their home. We can give them an approval for them to be a cash buyer. So they get a letter stating they're a cash buyer. No appraisal contingency. You can offer whatever you want above list or under whatever amount, because you as the realtor are negotiating it with your buyer in whatever terms you come up with. It's just like any other.
And you can close in 14 days.
Close in 14 days, and then we actually close the loan cash for your buyer, and then your buyer can list their home for sale. And when they sell their house, then they actually take ownership of their new home. They can actually, even once we buy the house, if they want to move into the house and do a lease back, they can, while they get their house freshened up maybe to sell and it's empty. And then It's a great program, and we're excited to see, where we go with that.
Yeah. Okay, awesome. Well, thank you so much.
You're welcome.
And if you ever think of any other questions for me or for Flo, give us a call. My number is 239-898-1841. And it was great doing this with you.
I know, this was great. I look forward to doing it again.